Hi dear students, now we are going to do demonstration problem 3. Presently, the company is working at 90% capacity and producing 13,500 units. So, from here we can compute 13,500 divided by 90 into 100, which means if the company's 100% is capacity, they can make the production or they can produce 15,000 units. Now, as per their demand, now they are working at 90% capacity. Actually, maybe take say an example, calculator. They are producing 13,500 unit of calculator per annum because the demand maybe that much demand is there, so they can produce only 13,500 units. Okay, here they give a table that gives 90% cost and 100% cost. There is a sales, fixed expense, semi-fixed expense, and variable expense and unit made. At 90%, the unit is 13,500. If it is 100%, the unit 15,000. Labor and material cost. I think the major cost here, they give fixed expense, semi-fixed, and variable expense. One important cost is missing, that is labor and material cost per unit are constant under present condition. Okay, which means it says that in addition to the above 1, 2, 3, there is another expense, labor and material cost. Okay, profit margin is 10%. This is another tricky information given. You are required to determine the differential cost of producing 1,500 units by increasing the capacity to 100%. The question asked us to calculate the differential cost. What does it mean, differential cost? This is the cost to produce extra 1,500 units. I am repeating, the cost to produce extra 1,500 calculate. Then part B, what would be the recommended for an export price of these 1,500 units, taking into account that overseas price are much lower than indigenous price. Okay, yeah, we can easily calculate here. Let's do the first part, number 1 or number A, determine the differential cost. So give a heading, computation of differential cost for 1,500 unit, given table particular and amount. Then here fixed expense is there. For producing 90%, which means 13,500, the fixed expense is 300,500, which means 3,500,000. If we are going to produce 15,000, this cost will be 300,600, which means 3,600,000. So to produce extra how many unit? 1,500. It is required what? 100 rupees as differential cost. So here we can write cost number 1 in particular column, cost number 1. This is the important one, material cost. Okay, labor and material, but that information is not given in the question, so we have to find out. We can find out it later. So available information we can put first. The fixed expense is equal to 100. So how we got 100? 300 minus 600, 3,600,000 minus 3,500,000, so it will come 100. Simple. Then fixed expense, take the difference of these two amount, 200 500 minus 97 500, it will come number third semi variable cost or fixed cost, 3,000. You got that? To produce extra 1,500 unit, we need extra 3,000 cost. That it means. Then fourth, Variable cost, that also we can easily find out. Take the difference, 1,49,500 minus 1,45,000 is equal to 4,500. Then when we add all these costs, we will get differential cost. But unfortunately, the data of direct material and labor cost is not given in the question, so we have to find out. How we can find out? We have another tricky point given here, that is the profit percentage is 10%. So as you know, so we are going to give a working note. Working note number 1: computation of labor and material cost. Labor and material cost, this is a basic understanding. As we know, sales, what is the total amount of sales? 15 lakh minus profit. How much is the profit percentage? 10%. Take the 10% of 15 lakh, we will get 1,50,000. So when we deduct profit from sales, we will get cost. How much will be the cost? 13,50,000. And we know all the cost except labor and material. What are the cost? Here we have the cost. So deduct one by one. 300, 500, which means fixed expense. 97,500, 1,45,000. Again, last one. No, that's all. That much. Okay. So this is the total cost. Total cost is 13,50,000 minus 300, 500 minus 97,500 minus 1,45,000. So we will get an amount 8,07,000. This will be the labor and material. Okay, when we add these labor, then variable expense, then semi-variable, semi-fixed expense and fixed expense, we will get the total cost of 30,50,000. So this is a backward calculation. Okay, yeah. Now we want these 8,07,000 for producing how many unit? 13,500 unit. So if you want to get the cost of producing 1,000, we want, this is a table for calculation of the differential cost for 1,500 unit. So how we will get the labor and material cost for producing 1,500 unit? It's easy. 8,07,000 divided by 13,500 into 1,500. 8,07,000 divided by 13,500 into 1,500. It will come around 8,9,667. Okay, yeah. So easily we can put this amount on the top. 8,9,667 plus 100 plus 3,000 plus 4,500. So it will come 9,7,267 as differential cost. So we got the first answer of the first part. Okay, what was the question? You just read. You are required to determine the differential cost of producing 1,500 by increasing capacity to 100. Presently the capacity is 90, and from 90 to 100, which means extra 10%. This 10% represent 1,500 unit. What will be the extra cost? If you incur this much amount, 97,267, then you can produce extra 1,500. Calculate, that's all. Then another interesting question, that what would be your recommended for export price? Export price of 1,500 unit, taking into account that overseas price are much lower than indigenous. Indigenous price means domestic market. For example, in India, our domestic market, India. So Indian price is much lower than indigenous price. Sorry. Overseas price are much lower than indigenous price. For example, in Indian, we can take the selling price of in India, 15 lakh for 13,500. So what will be the selling price per unit? 15 lakh divided by 13,500. So the domestic price is 111.1. For one calculator, the selling price is 111.11. The overseas price lower than, maybe it is what, 100 in USA. Assume that in USA it is 100. Then what they are asked, so answer B part of the question very easily. You know one thing, to produce the extra 1500 unit, we have to incur extra cost or differential cost 97267 divided by, for producing one calculator it will come 97267 divided by 1500, so it will come 64.84. This is the minimum price, not maximum. It is a minimum price we can fix. Okay, clear? So we can conclude that recommended for an export price of these 1500, we cannot fix an export price, but we can say that minimum we have to get this is the cost. Actually we will not ready to give for this amount. This is the minimum. Minimum means at least we want this amount. We can add some profit, say example 10, then we can fix the selling price for export price. This is only an assumption, 74.84. okay, is it possible? Yeah, is it possible? We can export this for 74. And one more thing, now we are selling the same product in the domestic market for rupees 111.11. So the domestic, this export price will not affect our domestic market price, so we can easily export this. The minimum price is 64.84. okay, that's all.